All right, today's start of a new quarter. We just finished our Q1 2023. That's turned out to be pretty good, right? I hope other folks are joining today and not thinking that it's an April Fool. We can fool for other things, but we'll be here every Saturday. There's no, there is no fool's joke around being here or not. So thank you for joining in. Okay, so I don't know, this week was a pretty good week overall from market perspective. Sorry if my voice sounded real hoarse. I'm under weather, so still recovering. It went yesterday night. So if I sound a little bad, my apologies, do let me know. And yeah, my look is very unkempt, haven't shaven. So that's why camera is not on. Not that my face is pretty to look at anyway, but hopefully I'll get through this 2-hour session. I really did not want to cancel it at the last moment, but I realized yesterday night that I'm going under weather. I had a sore throat and whatnot. Okay, so today, of course, we look at the general market, macro, but I also want to share something which I tried this week, which is around using ChatGPT. I mean, we talked about every week in terms of all the news, all the hype that we are seeing around AI, and this all was caused by the by OpenAI, which had released ChatGPT way back in close to end of November, right? If we really look at from end of November or December timeframe and what's happening to the lot of AI stocks, or even the stocks that have name AI in it, it's been a pretty, I would say, it's just unidirectional, just up to the north. Another one, which are AI enabler like NVIDIA, etc. So you open Twitter, you open your LinkedIn, and you see tons of messages around, hey, how to use this for various tasks, right? And we talked about multiple times in terms of whether it's going to replace jobs or not, what not. And my thought process has always been, it's a tool. Let's make sure we can use it for our purposes. So this week, I tried my hands, and something which is related to investing, not just asking Q&A. I think that's a very basic one, with which we start. But I actually used ChatGPT to add something on my Thinkorswim platform, right? So to create some studies for Thinkorswim platform. So I do want to share that. And if anyone of you have been experimenting with ChatGPT, more from investing side, let's discuss that. So that's one thing which I want to go through it. Maybe we will use some time today to create a new study in Thinkorswim. Does that sound exciting? You want to go through that, or should we discuss a few other things? Thinkorswim. Okay, how many of you actually have a Thinkorswim? You use Thinkorswim platform. You would have access to it if you are using TD Ameritrade. Jay says, I tried it once. ChatGPT confused ThinkScript and PineScript languages. For me, it worked good. So yeah, so Jay, maybe we will go through it. We'll take another example and see how it performs now. But I tried it this week. Okay. So yeah, I do want to go through that today. No, open my account, want to learn more. Yeah. Thinkorswim is, you can do a lot of stuff in it. It's easy to get confused. That's what happened with some of my friends who had opened account on TD Ameritrade way back in 2020 when everyone became Warren Buffett, and they immediately got confused and they were using Robinhood and continued to use Robinhood until they became a little more active into investing and options, and then switch back to Think or Swim one, because then they could not find in Robinhood. Robinhood was very prelim for them. You can't, do your risk profile, can't know the deltas of your positions, and then they never went back to Robinhood. So yeah, there's a lot of stuff you can do. I mean, I use my main platform is Think or Swim, so I thought I'll use ChatGPT. JS Vivek, you have a premium account with ChatGPT 4. I actually switched to premium account 2 days ago. After I got my first script done, then I thought, okay, I think it's worth paying for premium account on. So I used then ChatGPT 4. It's 2 days ago I got the premium account. Cool. All right. So as always, anything we discuss here, nothing is financial advice. We all are here to learn from each other and be a better investor. Okay. So before I dive into today's session, I do want to share is from when it comes to whether investing or life, I think thought process is all that matters. If you think you are going to win, it doesn't mean you are going to win. But if you think you're going to lose, you will definitely lose. Okay? So same comes with investing. I'm hopeful. I'm optimist when it comes to investing. I know in long term, this is the way to build wealth. Does it mean, hey, I'll be able to build it in a year or 2 years? Not. But if I don't get started on it, then I'll never be able to build build wealth for me and my family, right? So if you think you're going to get an A+, maybe we'll end up with A-. But if I think I'll get F, I will always get an F. It's all mindset. It's all mind game. So that reminds me, another thing which I've started over last few weeks is try to read more, right? And in this current busy life, I think each one of us have an excuse of why I can't do something which I want to do because there is no enough time. But then we realize it's all about our mind game and putting our priorities right. So I promise to the man in the mirror that I will every day read 10 pages. So I've been doing it for the past few weeks. So this week I finished reading this book, which is Creative Selection. It's a story about Apple design process and how how internals of Apple works when it comes to their innovation, right? So again, I promised the man in the mirror, so I wanted to read, and now I increased the pledge from 10 to 15 pages, right? And then I realized that I'm able to find time, right? It's all about prepping ourselves, whether it's an investing or reading. It's all committing to ourselves and just delivering on it, right? It's not a commitment to anyone else. It's to myself saying, hey, I do want to read. Same as the commitment or every week. I do want to understand what's happened in the market. I do want to stay investing in the market. And if you're not delivering, you're not delivering to yourself. So I just finished this, and the book which I started reading this week, like since yesterday, is this one, which is Leaving Microsoft to Change the World. Pretty fascinating book. This has nothing to do with investing, so, but it is about making, how marketing. It's a marketing director responsible for whole Greater China in Microsoft suddenly left everything to just build libraries in the country of Nepal. Okay. So yeah, that's a couple of additional commitments I made to myself, in addition to, hey, be active, stay positive, and learn about markets every week. So learning about markets, so what did we see this week? Despite all the things that have happened, banks going under in US, bank going under in Europe, market seems to be resilient. It has just brushed aside everything. And this was definitely a volatile quarter, but a pretty nice quarter to end. S&P is up almost 7%. Tech is up almost 20%. Okay. So we saw January was up, February was down, March is up. I don't know where April gonna go, but the Q1 has been pretty positive. Now, it could also be a window dressing, right? It's the end of Q1. All the hedge funds, mutual funds may want to go and clean up their books, show that the Q1 has ended positive. That could be that could be a reason for, hey, April we may see a drawdown, but who knows, right? Market always teaches some things. Market always surprise everyone when everyone is thinking it's going to be really bad, it's really be bearish. Market may look at and turn the opposite direction. So far so good. Q1 very positive. Even though we had all those bank issues, the strength in the tech, and remember, tech was the most beaten down segment in 2022, right? Tech and communication sector. So it is still on path to recovery, hasn't recovered fully, but I guess there's a long way to go. But so far, all the gains that we have seen in tech have been able to compensate for the drawdowns that we are seeing in financials and value. So a lot of the confidence has increased that the peak in bond yields is behind us. Okay. And market is all about confidence that the market participants have in future. And now based on the action from Fed last week, wherein they only raised by 25 basis points, I think now the participants are a lot more hopeful. And we looked at the chart last week in terms of the stagnation will be happening sooner than we expected, and then the Fed will pivot and the interest rates will start to go down. When the interest rates start to go down, the companies, the businesses that make money on a longer term become more attractive. And that's why we are seeing a lot of these tech companies which have a longer term outlook when it comes to profitability. Many of those small tech companies have returned or have done quite well based on that assumption that Fed will start to pivot sooner and stagnate the increase in the interest rates. So is everything good? Probably not. Commercial real estate is still under stress. And I have a couple of charts. We'll look into that on the dire state on the commercial real estate. But again, the things that it would impact will be another banking sector. Would a Fed pause be enough to end a bear market? So there was looking at the history. Let me just look at only the summary. The last two major bear markets ended only when the policy rates reached their lows. Right? In a high inflation environment, which was in 1970s, even after the Fed paused, the market continued to go down. So I don't know what's going to happen in this year, but right now it's anybody's guess. whether we'll see, whether we've already seen the bottom in the market. Some analysts says, no, we have not yet seen the bottom. Market should go back down to their October lows. Sometimes April, May, whatever the time frame is. But some other analysts who are uber bullish, they are looking at 4,500 for the S&P for the year end. Okay. We're also looking at spillover of this whole tightening into our real economy, not the stock market economy, but actually the real businesses, because now banks are tightening the lending to the businesses, which could dampen our economic growth, which would then mean economy would do what Fed wanted to do, which is to slow the overall economy and more job losses, which would bring down the inflation. So whether Fed brings down the inflation by increasing the rates, if economy continues to stay strong, job market continue to stay strong, then the only weapon that Fed has is to continue to increase the interest rates, which stock market doesn't like. But if economy or this tightening cycle of lending can break the back of economy, and then Fed won't have to increase the interest rates at the same pace. And I think that's what is making stock market more hopeful that Fed will either pivot sooner than what they had anticipated. But there's nothing that is coming from Fed yet. So it might all be our wishful thinking. We'll get to know what the inflation numbers come out to be. So at least this week, the personal consumption expenditure was better in terms of inflation numbers did not rise as expected. So that seemed a little positive from the fact that Fed will be more controlled in their rate hikes. But we'll have to wait for the PCI numbers, the real inflation numbers next week to see what Fed might do. Right? Now, coming to the commercial real estate, this chart should scare us. This shows the office vacancy rates in, this is as of till Q4 2022. So there'll be more, in 2023, it's got even worse. So the office vacancy rate has been on the rise. Despite all the efforts from companies to bring workers back, not all the companies have gone back to 100% in office work. Number two is a lot of companies are laying off workers, and that means the demand for office space is also going down. Now, the tech-focused companies, which are, let's say, in San Francisco, the vacant office space is now around 30%. Like 1/3 of the office space in San Francisco is unoccupied. So that should send shivers down those who are in commercial real estate segment. 30% of the San Francisco is unoccupied, and this is as of, I think, 30th March. Sorry, 27th March, 29.4%. And this is actually 8 times the vacancy rate from a pre-pandemic. So pre-pandemic, it was tad below 4% was the vacancy rate. And now we are looking at close to 30% of office vacancies in San Francisco. So what does that mean? Even if you're not involved in commercial real estate, what does that mean as an investor in stock market or overall economy. Okay. So again, we have gone through one crisis in the banks. This is the next crisis that could hit these banks, because now all these companies who had during pandemic had hired, I would say rather overhired, and also signed leases for this office space are all firing. Those companies are laying off people. They don't need this office space. Even the employees that are still with the company are not coming back. So all these big companies are now looking for subleasing the spaces that they had a lease for. So Meta is listing 435,000 square feet. Salesforce is listing 125,000 square feet in the Salesforce Star. Right? So again, every one of these companies are trying to cut costs, and one of the way is to maybe recoup some of those costs in these office spaces which are staying unoccupied by subleasing it to another company. Right? Now, don't be fooled by the rent. The rent hasn't come down as dramatically as the vacancy rate has gone up, which is very different behavior than what was seen in dot-com burst in 2000. The rents had plunged to 50%, 70%. So, but don't get fooled on by rent, because landlords are not lowering rent, because if they lower the rent, then their loan, it might become more difficult to pay the mortgage and to refinance the loan later on. And for some of those landlords, they may even have to go back to the bank to lower the rent, what they had earlier been charging. So many of the landlords are not lowering the rent, and these office spaces have been sitting vacant. Almost 30% of it have been sitting vacant. Now, the downstream impact of this would be when it comes to refinancing, or when these leases expire. Many of these companies are not gonna renew those leases. That means that the builders, the developers will not have the stream of income that they used to have, and they may not be able to meet their mortgage obligations. And who hold all these commercial real estate mortgages on their books are, again, many of these smaller regional banks. So till now, we saw one area where the regional banks were getting hit was because of increase in interest rate and holding underwater government bonds, treasury bonds. The next one is going to hit them is they may be saddled with a lot of these underwater properties, which banks can't do anything with these properties. So they'll be holding these assets, and there may be a fire sale to recoup some of their investment. But we'll see. We already saw, looks like some of these property developers, they've already started defaulting on their loans. So that will be a next wave in the banking sector. So I'm not, even the Q1 has been great, but I think I'm still cautious. Markets still could continue to go higher, but I'm been still cautious. But this is the how could I put it? The most negative delta that I'm holding in my portfolio. Or let's put it this way: the least amount of delta in my portfolio. Both of my trading portfolio, one is having negative delta, the other one is having like delta in 20 deltas or something, which is the least amount of deltas that I have ever held in my portfolio. And some of it could be contributed to this sharp rise in the market and in the stock value, which brings down your deltas. But I'm still holding that low delta. We'll see how it works. I mean, so far, you already made 22% for the year. I don't have to be too greedy. So I will continue to hold those low deltas in my portfolio. And another reason is all this rally that we are seeing is very concentrated in very few tickers, right? So we are seeing SPX is almost 7.5%, and out of 500 tickers that SPX has, 3 or 4 tickers have contributed 90% of that 7.5% gain. So it's a very narrowly focused, concentrated rally that we are seeing. And if the market turns southwards on these few tickers, we should be back, we should see market giving up all of these gains. If another interesting, if we remove the combination of Apple, Nvidia, Microsoft, Meta, Tesla, Amazon, Google, Salesforce, and AMD, SPX would have been negative. So it means these 1, 2, 3, 4, 5, these 9 tickers have contributed to 160% of the SPX gains. So very narrow, very focused on a very few tickers. And once the profit taking starts to happen in these tickers, the rest of the tickers, or the rest of the composition of another 490 companies in the S&P is actually returning overall negative. So right now, the overall market is being lifted by a very select number of these tickers. So that makes me little worrisome. This is not a broad-based rally so far. I don't know what your thoughts are. I mean, I'm happy I hold many of these shares in my portfolio. So those are doing well, but the fact that this narrow rally does suggest us that we are not out of the woods. Not every sector is not the majority of the economy is not, majority of the market is not really doing good. Okay? So this may be another case of wherein, hey, maybe we are in a rolling recession, right? Where in some sectors of the market is performing well, while the other sectors are down in the dumps. Okay? So is it going to be a soft landing, harsh landing, or is it going to be like this rolling landing? We don't know. But right now, all the gains that we are seeing are being driven by very few stocks, namely the big techies. So once the profit taking starts to happen in these, it could be a different story altogether. So that's why I'm being a little cautious over here. So I see a question from Renata. Did you follow international affairs, how economy can do well when companies are laying off people? Inflation is going up. Companies are trying to improve profits by cutting costs. BRIC countries are trying to get off dollar. So I think so there are, you are right about the last one. There is a de-dollarization that is, kind of has been in progress for quite some time, and not only this year, the overall US, the share of US dollars in global trade has been coming down on last 20 years. So that's not a surprise. And based on whatever we had done after Russia's invaded Ukraine, wherein we weaponized the whole SWIFT system, is also causing other countries to think how much can they depend on US, right? Now, given our own economies upside is not doing that great. We are having our bank failures. So there are definitely doubts in minds of other countries, and they have been forming their own consortium of trading in and trading in currencies other than US dollar. Right? China has been doing a lot of trading with their road and belt initiative. So belt and road initiative, I think BRI initiative with Africa, a lot of African countries, and that all trade has been happening in yuan. China and Russia, they recently had a meeting. The premier of those two countries had a meeting around how to get off dollar. India had been buying oil from Russia, again, not in dollars. Saudi Arabia is already contemplating to sell oil in yuan, and Saudi Arabia has been the one that is been helping US in keeping dollar as a reserve currency. But now I think, again, after many decades of being sole superpower, there are doubts that are being sown in the minds of the other world leaders, or how much can they or should they depend only on US dollars. So but that's been happening, nothing new. Hey, I think no other questions. All right, few other charts that caught my eye was US bank deposits continue to go down, right? Deposits as well as lending. Now deposits fell by $126 billion. And this was a big drop that we've been seeing ever since we saw the crash of these smaller banks. And number two is these banks are not paying as what you can get outside of these banks, right? So all the money that are being withdrawn from the banks is moving into money market funds. So if you really look at the second chart is, which is, where is the bank deposits are going down, the money market fund, the buying, that has been going up. So why, and why not? And if your bank is only paying you 0.02%, it's a financial sin to keep the money in the bank when the money markets are paying you around 4% plus, right? Or if you can invest in our treasury bills, they are paying 4.8%. So why would anyone be willing to keep this deposits with the bank unless bank matches what you can get risk-free outside of the bank? So and now if the bank's deposits are flying off, it means they don't have much to lend. That also means the lending will become tighter. If they have a fewer deposit, then they can lend out correspondingly. They will lend out fewer dollars. That means not enough, or a decrease in the amount of loans available for businesses and the companies, which should then contract the economy, and then Fed will reduce the interest rates, and then the whole economy will just go through that same cycle again. But right now, this is the state wherein US banks are losing deposits to treasury bills, or mostly to money market funds. Right? So if you are still holding cash in the bank, you may want to think twice. Right? These banks are not paying much. So looking at overall indices, so far pretty good. I think like S&P is up almost 7%, and Nasdaq is up 17%. QQQ ETF is up more than 20%. So So far, so good. Looking at this weekly performance, all green, not only US, but even if you look at the world market, I think this week was a good one for the overall markets. And if you're holding other securities, and most surprisingly, it was actually surprising, but we'll talk more about Alibaba. Alibaba is up 18%. Despite all the asterisk risk factors that come while you're investing in China. But this week was a good week for a lot of these Chinese stocks based on what Alibaba, and I think, I'm not sure if JD.com also followed up with that, but the expectation is whatever Alibaba had done, maybe a lot of other big tech companies could follow the same path. And we saw a lot of Chinese stocks come back in green. So far, I think this overall week was pretty good, irrespective of wherever you are in the world market. I saw another comment. I missed that one earlier. Ramesh says, Melly shares are shooting higher. They indeed are, because Morgan Stanley woke up and then they upped their price target on Mercado Libre. So I'm a happy shareholder. I won't complain that, but we've been talking about the same stuff for some time, and Morgan Stanley came back and had the similar thesis around multiple businesses of Mercado Libre. It's not just e-commerce, but also a payment platform and becoming big logistics. So that's why this week we saw Melly also shot up. Also the overall markets were up as well. So these were the two reasons, at least I could find, why Mercado Libre shares are up. And from overall market perspective, we are back into a neutral zone. We spent a few weeks in fear zone, and based on the last week's happening, now at least back in a neutral zone. So out of this fear, back into neutral, and who knows? Depending on next week, if the inflation rate comes down, we might see market going higher. So it's been a very volatile market. It's been impossible to predict what market's gonna do, month over month. Like we already seen, and we saw January up, Feb down, March up. This is already being, more like a sine wave curve. So yet to see what April brings for us. Cool. I think any other thing you've been watching, you got interested in market at a macro level? I'll give some rest to my throat. Trump trial. Yeah, I did follow the details though. I know he got indicted. There were some protests around it, but maybe we will see a lot more Twitter becoming a lot more active. Yeah. So these political dramas will continue to happen. I'm not sure about the impact on what market's gonna do, but what did catch my eye was one of the Trump social media company that went IPO through a SPAC, DWA, right? Let's see. Yeah, so that had, yeah, okay. So it was only 8%, not too big. I did see DWAC name somewhere saying, stocks that are moving in the market. So I thought maybe it has something to do with the whole Trump trial. Alrighty, I'm not sure if Raj is here yet. So last week we did talk about backdoor Roth IRA. Maybe once he's there, he can share some information. The other thing was around nationwide 10-year annuities paying 8.5%. Who was that who shared it? Hold on, let me go back. I couldn't, that's Dave. Okay. So I couldn't find the details of 10-year annuity paying fixed 8.5%. So if anyone else was able to find out, do let me know. So nothing, I tried to read through it, but it was all indexed. And if look, depending on which index you pick, there were, of course, the returns will be based on that index. So don't have much information on that as well. Not sure if any one of you dug deeper into this annuity topic that we discussed last week. Anyway, so then we'll continue to move on. Sector wise, this week energy did well. Overall, I think this week SPX was up 3.5%. That makes it up 7% for the year. Pretty good. Nothing to complain about it. So from my own portfolio, I bought some XLI, Disney, and INDA. This is part of, generally when the market, on the day when the market is down, I do want to go back and add something to my portfolio. So just a part of that. But this is our first meeting after the end of a month. So as always, I do want to share what do I hold in my portfolio at the end of every month. So this is the current situation. So no change in the top 10, because relatively, I think probably some of their relative positions have changed between, not end of February, between end of February and end of March. But overall, the composition is still the same. SPY, Apple, Mercado Libre, Microsoft, Meta, ASML, QQQ, Amazon, and Gold. These continue to be top 10 in my portfolio. No change for month of Feb or March. But I added one more ticker. So now from 69, it's a 70 ticker. As you guys know, I've been restricting myself for now months to add any new ticker. I've been on reducing the number of tickers in my portfolio, which I think from 2020, start of 2022, I had more than 100. Now I'm close to 69. But this month I did add one. I added XLV to my portfolio. This is an ETF on healthcare. I had only one ticker in healthcare, and I don't track healthcare that closely. So I really wanted to have more exposure through the ETF and not add to the specific ticker that I hold in my portfolio. So I added XLV to the portfolio. Cool. So as you can see, I think I do hold a lot of growth stocks still, but the biggest position is still SPY. So when I look at a portfolio and look at which index I would like to track, overall, I think I still want to track SPY. It corresponds more to the overall market than just with tech. Though some of the individual biggest positions are tech. Cool. Any questions on this? Again, I share this at the end of every month because we do talk about stocks. So just being transparent of what I hold in my portfolio. Okay. So this one, Ramesh said, don't see Tesla. I don't own Tesla. Don't see NVIDIA. It's not in top 10. So NVIDIA, I do hold NVIDIA. If you look at this is NVIDIA over here, but it's not top 10. So that's why, for all that matter, even Shopify doesn't show up. Shopify was, I mean, it goes above 45 or 50, it probably will start to show up in the top 10 leaderboard. But Tesla, I don't own any Tesla. Right? Something new that I do want to share is top 10 across all the portfolio year to date, and the bottom 10. Okay. May what it will, I'll give you a few seconds to go through this. Fastly, GBTC, NVIDIA. So NVIDIA is up 94% year to date. So that's the top of leaderboard. DraftKings, Meta, C Limited, Roblox, Mercado Libre, Airbnb. The bottom 10 performers, Nanox, J&J, Magnite, XLF ETF, financials, no surprise. India specific ETF, XLV, Markel Insurance. It's not an insurance, it's like a Berkshire Hathaway company. Verizon, ACHD, which is a dividend, high dividend. KWeb is Chinese-based ETF. Right. The rest of the 50 stocks are in between these. Right. All right, that's about my portfolio. Now we'll talk about this next month. So moving on to the core topic for today is my experiments with ChatGPT. So far I heard about it, I read on tweets, on LinkedIn, but this week I actually started to use it. So this is the book I shared earlier that I finished reading this book. And if I were to share the summary of this book, I would be nowhere closer to what I would be spending a couple of hours and probably won't be doing as good a job as what ChatGPT had done for me in a couple of minutes. So all I asked ChatGPT was to summarize this book for me. Okay, I think the prompt was a little different. Hold on, let me pull that up. Where is this? Okay, there it is. Okay, so I did two things. One is I told them that you are a book reviewer, and you are expert in providing summary. I'll give you a book name, and then you give me an answer. So I provided a book name, saying, this is the book. This is the book that I just finished reading. And I asked him to give me a summary. So it gave me a summary, chapter-wise summary of each chapter and what's the quick headlines in chapter, what's covered in that chapter. But then I said, oh, that's not really I was looking for, because I didn't ask it correctly. So then I changed my question saying, what are the key takeaways from this book? Share it in a blog post format. And that's what it started sharing in terms of the key takeaways. Is what's over here, right? First of all, who had written this book, what this book about, and then what are the key takeaways. And this is pretty accurate. From to get a quick summary of the book. Now coming to, if you're not going for a book review club, I'm not a part of any, but this is pretty helpful. Now you can go and modify this, but instead of spending an hour or two and staring at a blank sheet and then thinking, okay, where should I start? This could be a starting point for using it. So that was the first one. Then I thought, why not try something else? So then I went ahead and started trying where is that? Trying to add some ToS scripts. I know, Jay, you mentioned that it had a problem. So what were you trying to do? Maybe we can try it now. So let me open up my ThinkorsWim. So this week, I got ChatGPT to give me a ThinkScript and a label, which will find out if there's a golden cross that occurred in this ticker over the past 2 weeks. If yes, then it'll print a label out here that golden cross occurred in past 2 weeks. So if we look at a TTD, golden cross did occur. Now, golden cross is, again, those who are chartists or focus on technicals, is a one which is generally considered bullish when your 50-day moving average crosses the 200-day moving average in the upward direction. So now I want to know, I wanted to know, okay, guys, if I'm looking at my ticker or if I build my watch list, I do want to know which one of them had a golden cross, right? At any part of a time in last 2 weeks, right? Or if it had a golden cross, let's say 7 months ago, the stock probably had already done what it would have done, and that may not be as relevant to me. So you could pick up your own time period that you want to go back on. So my prompt was that I want to go back 2 weeks and find out if there's a golden cross that has occurred. And then I want to use that in my chart. So give me a label, and then I get, that I can use in my chart if a golden cross had occurred. And it was able to do it pretty nicely. So if you look at it, is yeah, the 7, right? Write a ToS script of finding if a golden cross occurred, and if yes, create a label so that I can display it. And that it did, exactly. I didn't even have to modify anything in this. There was another one that I tried earlier in which I had to do a little bit of modification, but this one was pristine, no changes. I just copied and pasted the same study and added the label on ToS, and it just worked. So look at some of the other ones. I don't know if NVIDIA had a golden cross. No, it did not. NVIDIA had a golden cross, but it was right here in January. So since January, NVIDIA already had a huge run-up. I'm not interested in this. I'm interested in knowing if the cross occurred in, let's say, in last 2 weeks, so that if I can also participate for this one. Ramesh says, was your goal to find a new investment, either new investment or even looking at my own portfolio? Right? Just so, for example, if I see that a golden cross had occurred and it also matches with, let's say, some of the other indicators that I look at, it might be a good time to maybe sell a short put on this. Okay. It's again one more data point to frame the trade. That's what I was looking for. So let's look at. So then so I'll go back here. So this is how I started. I started with the Google sheet. It didn't understand. So then I asked it, can you code in ToS Script? They say, yeah, I can help you with ToS scripting. Well, that's cool, because I did not know. I had seen examples of people posting that it's able to code Python. So I thought better let me ask it, right? So then I asked her, generate a YTD change in the value of a stock, generate a script for me. So this is for the testing. I already had a YTD script, but I really wanted to check if it, is the code reliable or not. So not only generated the code for me, it also told me how to use it, but I already had it. So then I kind of played with it, saying, hey, if year-to-date change is greater than 0, give me a green background. And if it is less than 0, give me a red background. And it did that. Then I asked him if it is, if it is, not here. Okay, yeah, I asked if it is less than 0, give me a red background, but a white font color, right? So then it came back and told that, sorry, ThinkScript doesn't support it. Right? So not it tells you what it can do, but it also come back saying, sorry, whatever you asked for, I don't support that. So anyway, so then I said, instead of a label, I also want to, no, so this one, then I told, I had actually created a column because I already had this YTD script, but I was not able to figure out how can I use that column to create a label on the chart. So the chart that you see is this one, right? I can reuse, I can write the additional, use the same code, but then I'll have two separate code bases. I wanted to do was to just use the same new column I created here, and I wasn't able to figure out. So I asked it, I'm like, how can I use this? And it is not possible to directly access it. You will have to just copy and paste the same code, which is what I was trying to avoid. But good thing I liked it. It tells me that this is not possible to do it. So don't waste your time in trying to do it. All right. So now coming to this the golden cross, right? So this was pretty okay. So my prompt was write a ToS script for finding if a golden cross occurred in past 2 weeks. Also create a label that I can display on the chart section of the ToS if the golden cross occurred. So that was my full prompt for the golden cross. And then it gave me what the golden cross does. So then I also wanted to use the golden cross as a column. So then I said, modify this code so that I can use it as a column in the watch list. And this is a little different. So then it gave me another code and told me, how can I go and create a custom column, which I already have a few custom columns. I already knew about it. But then when I use this, it gave me an error. So then I say, hey, I got this error when I try to use the script for a custom column. And then it apologized. Say, oh, this is an oversight because in watch list, you need to define a plot and then fix the code. And that's it. So it did error up the first time because probably didn't catch that I was asking for a watch list. But once I told them that I'm getting this error, it fixed it. And after that, I was also able to add, this, let's say, not in here, watch list in my watch list, which says golden cross in last 2 weeks. So 1 means the golden cross occurred. So you can see here, golden cross occurred in past 2 weeks. 0 means it did not. You have another one, golden cross did occur. So now, if you're using Thinkorswim, you can use the same column, and if you want to use it for a watch list or do whatever you want to do. So you said, did you apply that for my holdings? Yes, I did. Right. So now you can apply to your holdings, you can apply to your S&P, you can apply to the overall market. If you're trying to hunt for the tickers that have crossed, you can use it in your scan. You define the universe of the overall stocks that you want to look at, and then say, I want to look at a golden cross. And it will give you. So next, I wanted to find out was a death cross, which is the opposite of golden cross. I don't know if should we go through that live? I don't have a death cross, but we can just maybe quickly try. Shouldn't take much time because all it needs is a same one. And let's see if death cross occurred. Let's see what it does. So death cross occurs when a short-term moving average, usually 50-day, crosses below long-term moving average, usually 200-day. Okay, so now code is there. Jay says, try making a scan out of that same thing script code. Okay. All right. Let's copy this code. Let me first get this label out. All right. Let's go to studies, edit studies, create a new study. All right. Hey, apply. So now I have to, first of all, I have to find out, do you know anyone where the death cross had happened? Most of the market has been in upswing, so I don't know if the death cross actually happened or not. Oh, let's pick up some these bank stocks, right? KRE, bank ETF. Surprisingly, not in last 2 weeks. Huh? SVB, it doesn't even trade now. FRC, not in last 2 weeks. SVB, it doesn't trade anymore. SVBI, I think that was a ticker, or SIVB, SIVB. No, this is a 200-day moving average. Nope. Coinbase, COIN. Coinbase had a golden cross, not a death cross. All right, so, but that's how, I mean, at least 50 days, 7 weeks ago. Let's try to change that, right? I'm looking only for 2 weeks. Let's edit it to, instead of 2 weeks, I look back days instead of 10. Let's make it 50 days. That means I'm going back 10 weeks. You can make a scan to look at all the stocks where this condition is true. So let's go to the scan. But for the scan, I need to have the, okay, so I can look for a custom study. Study. I haven't used it in scan, so I don't want to, hold all of you here. I don't know where, I can pick up the custom study that I created. But maybe I'll try next week. I know I can create it as a watch list column and then use it as a column and then use it in the scan. That's what I've done for the golden cross. But yeah, okay. Ask you to modify the code for scan. All right. Yeah. Why even try that? Okay. So I can use it in the scan feature of US. This is fun. Oops. Okay, let's copy the code, come back to scan, add filter, study, my custom study. Okay, on a custom study, think script editor, add this. Okay. And then scan. Okay, so let's edit this and maybe make it look back period to be 50 days. Okay. Scan. I think let's scan in. What's this? All symbols. There we go. So let's pick up F5, whatever, FC. Yes, so death cross occurred in past 2 weeks. So I think for me now, once we start using and then we realize the power of these tools, and that makes me more and more bullish on to the AI as a sector overall, right? I'm not sure which companies will be successful, so I'm not running behind, let's say, some of these tickers like AI ticker, or many of the companies that are now changing their names to have AI, but it might be a pick and shovels play. That's what we are seeing. Whole with NVIDIA is it might be just starting, right? It's up 95% for the year, but it may have more room to grow. I'm sure this hype will die down for some time. If you really look at all the VC money, 90% or maybe 80% of the new projects that these VCs are funding on Y Combinator are all related to AI. So it is right now very much hyped, but I do see a usage in which, even if you're not a technical person, you have a developer at your disposal now, which is a great power for you. If you are not a writer, at least you still have someone who can give you a head start. And of course, then you can add on to it more and more stuff. Like if you want to use it along with DALL-E, it can create images for you and so on and so forth. So this is not the, of course, right now it is hyped up, but this is going to stay over the next 2-3 years. The way we work will be completely different. In last 2-3 days, it has reduced my usage of Google. Right? When I have a very specific task that I know what I want, it's better for me to come to ChatGPT and ask it, rather than not trying to go to Stack Exchange or go to YouTube video to now find out how do I create the scan. We just did it, but to create a death cross use it in scan, use it in your watch list or on your chart, or you can use it in your watch list. So that's really, really very powerful. But next will be, maybe I'll explore more on some other real code as well. So yeah, if you have some time, I think we all should learn how to use these AI tools if we want to stay relevant. That would be my I would say quick summary out of my experiment with ChatGPT. Cool. All right, coming back to our regular session. Anyone else is using ChatGPT? I know a lot of people use it at work. Anyone else using at work or for similar stuff? If not, maybe, yeah, get your hands dirty. Or it is available for free. So really don't need to have the paid one. The paid one is $20 per month, but you really don't need that. Just try it with the free version as well. Yeah. Cool. So hold on, let me sip some more. So what else caught my eye? Things happen in Cyprus again. This also happened in Cyprus. Okay, so this was the old one. A bank legally stole depositor assets while running ads that they were safe. You backed them up. So many stopped trusting banks. 25% of deposits moved out, much into physical cash. Mattresses became safer than banks, something that we are witnessing here. Here it's actually going into the money market front. But another thing which is cause of concern is the policies to limit the use of cash as a means of payment and wealth storage may seriously constrain the asset allocation of households. Or put another way, the combination of cashless society and regular deposit haircuts could be a recipe for economic catastrophe. So this had happened in Cyprus, wherein if you had a deposit of, let's say, $1,000, one fine day, Parliament, Cyprus Congress had passed a law so that everyone will take a haircut. You no longer have $1,000 in your bank. And I don't recall what the haircut was, but it was like suddenly overnight that haircut was forced onto it. Now, if we move over to the completely cashless society with CBDCs, where you can't even, then there is nothing much you can do. It's an account held at government, and all they need to do is just to change a number. So that's going to be really scary. Similar kind of a thing happened in US is 2 weeks ago. FDIC government appointed CEO of Silicon Valley Bridge Bank encouraged customers to publicly return the funds with zero caveats. Means all the funds were protected today, and that's like as of yesterday. FDIC emailed clients of Silicon Valley Bank and First Citizen to tell them that their funds held in non-US euro-dollar accounts are now in receivership. This is the deception and theft of the highest degree encouraged by US government and their appointed representatives. So we are not out of the blue yet when around the whole banking crisis. So no wonder we are seeing, Bitcoin is up, whatever. GBTC, which is a more equivalent, wherein more institutional investors have exposure to Bitcoin, is up more than 100%. And now we saw Tim Draper on March 24th actually giving advice to the companies in his portfolio for business cash management post SVB fiasco, right? So keep it simple. Your primary responsibility is to build a business, and cash is the business's lifeblood. Diversify your risk. Businesses can no longer rely on one bank or one governing body to manage their cash. We recommend keeping at least 6 months of short-term cash in each of 2 banks, one local, one global. But the other one is, and at least 2 payrolls worth of cash in Bitcoin or other cryptocurrencies. Asif, isn't BTC early Draper early BTC? He is, but so is, so whenever anything coming out of a VC, always take it with a grain of salt. When VCs were crying and asking their, when VCs were imploring government to bail out Silicon Valley Bank, saying it's not a bailout for the banks, it's a bailout for small businesses and all that stuff. We all know why they were doing it. So yes, Tim Draper is also one of our early investor in crypto companies as well. Right? Yeah. So I don't take anything on a face value coming from any VC. So that's on the crypto side. On the other business side, why Alibaba was up 18% this week? Because they decided to split the whole empire into 6 businesses. That means these individual 6 businesses, and that's where we saw it, Alibaba going up from 85 to now close to it's 100 and plus $102 in a week. So it's a $220 billion empire. Is going to break itself up into these 6 businesses. So these 6 businesses will be individual companies running as individual P&Ls, could go IPO individually. So essentially all this 18% jump is on the same process as the sum of the parts will be larger than the whole Alibaba. And this is the thing that we've been, I'll come to that when it comes to the US side. So these big 6 ones are the commerce group, which include Alibaba.com, and then the local one, which is Taobao and Tmall. Alibaba, AliExpress, Taobao, Tmall. The other one is a cloud business. So just like AWS and Azure and Google and Oracle in US, Alibaba Cloud is a big player, especially in China and the rest of the Asia. So that will be another segment. Third one is going to be logistics, which Cainiao. This is basically fulfill all the orders in China within 24 hours and outside in 72 hours. Then the local consumer services like Fliggy, which is their online travel platform. AMAP is a mobile map focused on China. And lastly is digital and entertainment. So the whole jump that we saw is in Alibaba because now maybe commerce and cloud could become 2 separate companies, and maybe someday Alibaba Cloud will have its own IPO. And not only in China. I mean, now this will start to raise questions on US companies, right? And this is the question that have been asked of Jeff Bezos for years on why not separate out cloud and e-commerce. Now the question is going to be similar stuff for so Amazon has got multiple businesses, right? They got AWS, which is their cloud computing, e-commerce we all know of, logistics, warehousing, gaming, live streaming, Twitch. These all could be a separate independent businesses. How about Alphabet? Right? YouTube in itself is a huge separate business. It's as big, or probably now getting bigger than Netflix. Now, but it may not command the same valuation if it stays under the big umbrella of Alphabet, whose valuation is mostly driven by their search business, right? So if there are more and more questions being asked and more pressure being put on Amazon, on Alphabet, for them to break up or separate out these additional businesses, at least for a short term, that's going to be really good tailwind for the stock of these companies. So something to watch out for is maybe look at the murmurs of what's market is, if we see more talks in the market about similarly separating these big companies into separate business, that is going to be a good tailwind. But of course, these companies are so big that there are not many activist investors who can push around Alphabets and the Amazons of the world. Now, you could do that with, let's say, Disney. You could do that with Salesforce, but these businesses are really big. But now with Alibaba, there may be some hope. So that also gave hope to a lot of other Chinese stocks. I think I don't own JD, so I didn't follow, but I probably JD may be looking at a similar breaking up of its businesses, because JD also owns its own logistics network. But I think this announcement from Alibaba was a big tailwind for many of these Chinese stocks. So this week was a good week for, I would say, overall Chinese stocks. KWeb is a Chinese ETF focused on the internet. So that's on what we saw on Alibaba. Any holders of Chinese stocks? You love Chinese stocks? Do you have in your portfolio? No love for Chinese stocks? I mean, I do hold. It's a small part of portfolio after what happened to Alibaba and a lot of other Chinese stocks. Asif says, yes, he is holder. Yeah, just remember it comes with all those risk of can get shut down. Now, at least over past few months, we don't see rhetoric between SEC and the Chinese government on giving us access to the books of the Chinese companies. There was some compromise that was done a few months ago. Hopefully that's good enough, but the risk is always, always hangs on our head when you're investing in Chinese stock. Is we never know when we can get shut out from these stocks. So keep your position size accordingly. One Baba stocks get split into 6. No, that won't happen. The way generally these spin-offs happen is just like Intel spun off Mobileye into a separate company and separate IPO. So these may go and have its own IPO, and Alibaba will have a big share, or they may retain the share in that company which is going to have a separate IPO. And then they will benefit from unlocking the value in that individual separate company, of which Alibaba holds a big, the Alibaba as a group company holds a big share. Yeah. So again, I don't know whether these 6 all will go IPO or whatnot, but at least they have shared their plan that that's what they want to do. We'll see in the details of what exactly the modalities, how the plan will be fulfilled. But it's a stock won't get split. It's just that the valuation, the value of the stock may go higher because now they're holding, it's become a holding company of another company, which is now separately listed on the exchange. Okay, another one, Twitter recommendation is now available as an open source code on GitHub. That was a big news for Twitter to actually open up their whole recommendation source engine. And I've yet to figure out, I'm sure someone will have already gone through the details of it and would start sharing the details either on LinkedIn or Twitter on how Twitter ranks you or decides to show your tweet or not. So something that maybe we can discuss later on if you're interested. But that was another interesting one. Another one is Apple starts to roll out pay later service. And we know Apple had started this as a pilot project in Canada, in one province of Canada. Maybe now they have learned from, they were partnered with, I guess, a firm I think they have learned enough from a firm now to start their own service. So now Apple Pay Later is Apple's version of BNPL. So you already have what a firm, Klarna, Square, Afterpay. These are the big players in BNPL segment. Now we are seeing Apple jumping onto this play, which makes sense because now Apple devices are already reaching that stratosphere level wherein you might want to split the payment into multiple payments, right? Make it easier for consumers to buy your over expensive devices is to offer them an easier way to pay for it. So it makes sense for Apple to go in this. But of course, they have a new subsidiary which will handle all the credit check and all that stuff. Now, many of the existing incumbent players, firm, Square, Klarna, haven't been doing that great when it comes to this business, which is not surprising. But Apple can afford to lose money on a little bit money on this if this encourage the sale of their high-end devices. And so I guess like one of those businesses wherein let's lose on this business, which will help us to grow another business. Maybe the gameplay over here with Apple. I don't know. I mean, this is what I guess. It's not been so far it's not been a good business to make money in, but Apple can afford to lose money on this. The other interesting one is corporate bond ETF. There's one ETF from Schwab in which the investment, the inflows were up like 10 times, 1,000% higher in just a week, because this offers 3.7%, and it looks like a lot of portfolio managers are now looking to get some decent yield. And it used to have maybe less than 50 million or somewhere, and now almost $2.6 billion were added to this on Thursday. So the same story continues, right? Hold cash, but not hold in the bank, or hold it in either in money market funds or these high yield corporate bonds or in treasury bills. Same case, BUFA says investor rush to cash is fastest since COVID hit. After all the fiasco that we are seeing with the banks, that's what the retailers are rushing out. The retail investors, they are rushing out to hold cash. Money market funds surge. We saw another chart already. And other thing is a lot of money pouring into now emerging markets. So emerging markets became your China, Brazil, India, some countries of South Asia. For me, I just use this EEM ticker for my emerging market investment. Now, again, if you go back and look at last 20 years, emerging market have not outperformed US market. US market has been on tear, not 20s, but at least on last 12, 2008, but after the financial crisis, US market has been on tear because of these low rates environment. But now emerging markets may look more attractive, and we do see redemptions happening on the US side and also going into the emerging market side. And the last one is Mercado Libre. I think Ramesh brought up what's happened. It is because Morgan Stanley has lifted its target price to $17.70 and maintaining it as it's one of the top picks. So that was, I guess that's what caused a big jump in Mercado Libre on Friday. Right. So, and Any other specific stock? I don't think I have any stocks. I wasn't, like I said, I wasn't really in the best of my health yesterday. So well, let me see anything else. Yeah, okay. So we can share this also. Another chart I saw was Morgan Stanley list of quality stocks, which is basically based on your 5-year, revenue CAGR, EPS CAGR, EBITDA margin, your return on assets. So Google, American Express, Blackstone, Cheniere Energy, Costco, Eaton, I don't know what it is, Eli Lilly, Estee Lauder. That's another interesting chart I came across. If you have any specific question on this one, no. Link for the qualities. I have to go back to the, oh gosh, I forgot to add the Twitter link. I can share this one for next week. Right. But what I didn't like was this one, 0-day options, things that we talked earlier, has been flashing some warning signals. Saw a big article on Bloomberg on the lot of risk that a lot of retail investors have been, or I won't call them investors, retail DJs cameras have been taking. So there's a big article in Bloomberg. If you're interested, you can read through this. This again seems to be, reminds me of those 2020 days in 2020, wherein you would think nothing could go wrong. And people are fascinated by these newer instruments, newer, I would say, in some way, maybe a weapon of mass destruction, which might work once, but overall, it's been a little scary story. I mean, of course, it has a place for managing your risk on daily basis, but that's not what most of the retail investors have been using it. They've been using more as a, let's take a pot shot on the market, what market is going to do today. And if it works, it'll give me whatever, 5x, 10x. If it doesn't work, I lose this. All right, last one is interesting. In China, there is actually a whole driverless bus service. So this is what scares, I guess, our current administration, is how far ahead China has come in when it comes to using AI, even with the restrictions that have been put, that we have in place in terms of their access to advanced chips or access to US technology when it comes to AI. But at least now there is a driverless bus, and that's already providing service. But the route is 15 kilometers, which is closer to, let's say, around 9 miles. But it's a start, I would say. Now you have your automated driving buses in China. I've yet to see those, except I think in cruise, I've yet to see the Teslas driverless cars, robo-taxis. As if US has an engine-less bus, Nikola. True. Now, Nikola, there was another news. I think that share has gone into dumps. They're continuously facing cash crunch and been trying to raise money. I think this week news came out that they want to raise another $100 million, and that decimated the stock. I mean, if you look at it, let's say we have a weekly one, 5-day, 5-minute. All right, yeah. So the stock was down almost on again 20%. Surprisingly, if you look at this, this was some part of a time the stock had touched $93. This was the frenzy of all these meme stocks. Now it is just at $1. I don't even know what Nikola has now. I haven't followed them after they had imploded. And there was a change of CEOs and whatnot. All right, I think that's all I have for today. Sorry about my voice. I guess hopefully I'll be much better. By the way, yeah, for sure, by the next week I'll be much better for when it comes to my health. But Todd, we have what 25 minutes remaining. Anything else we want to talk about? Any other company we want to look at? Raj wasn't there, otherwise we would have covered the backdoor 401k. There have been questions around something I want to share. We've been chatting in our friends group is around tax filing date. This applies to the questions are more of a California residents. Looks like there is a relief, flood relief, given in the terms of that both the state and the federal taxes, the April 18th deadline has been extended to October if you are in one of the those flood affected areas. So there is a notification from IRS. So if you haven't done your taxes and you're sweating about it, and if you're in California in one of those counties that IRS considers as affected by flood, then you have a time to till October 15th. And I think even for the, we'll go through the details. I think even you don't, you may get a relief on penalties, etc. But there is an IRS notification around that. Hold on. Yeah, filing and payments extended for disaster list counties. Yes. So let me just pull up the notification. One second. Where is that? I shared. Okay, this is the one. Yeah, extension is viable. You can always extend the filing, but not the payment. And it doesn't apply to all there is a list of counties to which it applies to. So it's not for all of California. Okay, other question, can you share the ToS script for Golden Cross? Okay, let me pull that out. Golden Cross. So this is for Golden Cross for past 2 weeks. You can modify it, modify the look back days depending on. Okay, Bob, say if you have time, can you can give an overview of metrics ratio used to evaluate stock before buying? Yeah. So for me, when I buy a stock, and I don't want that time, I don't look at the metrics or ratios. I don't look at valuation ratios or valuation metrics. I look at more at a business. And hold on, maybe I can give you brief. Let's open up. So I maintain a document for, let's say, all the stocks that I'm holding. And hold on, let me just pull this up. Okay. Do I have my investment thesis in this one? Okay, so I think I invested in before I actually started getting the document. Let me pick some other stock which I bought it. let's see. We looked at many companies earlier. Maybe, okay, this is pre-IPO. Just give me a moment. I'll ping something. I'm an old timer, so okay, yeah. Well, this is the earnings, not so good. So I am mostly look at the business, the competition, look at what they have to do, okay. So this is like we discussed on Mercado Libre. This is how I frame my opinion is I go and look at the businesses, then I look at their competition, look at what their opportunity is, and then decide to, take a position in it. So I focus more on the business when I want to take a position. And then I start tracking it, every quarter, especially my big positions. I track it every quarter, see how they've been doing it. Are there any changes in the business? Do I like the business or not? If I still like it, I'll hold it. Do I want to add to it or not? And, but this is what I do when I have to take a stock position. Now, when I'm buying it, and then I do keep track of, okay, after a quarterly earnings release, I keep track of what had happened. Did any of my outlook has changed? Has company pivoted? Has management has changed? Anything that if I don't like it, then I'll drop it. And now to take a position, it could be either buying a stock outright or start with the short put or short put spread. And then once I have the decent amount, I start selling covered calls to reduce the cost basis. So I know that doesn't answer your question, Bobby, but I don't go to, let's say, Finways and then filter for metrics and just buy based on that. That I might use that screener or a filter to give me a list of some company that I may want to add onto my portfolio. But then before I add any company into my portfolio, I go through this process of understanding business, understanding competition, looking at management, and what sector are they in, do basically a business research before I put my money in it. Yeah. So that's my process. I think I do have a filter somewhere to find out resilient companies, but I haven't used that in last 2 years because I wasn't looking to add any more ticker, and I haven't added any new ticker to my portfolio in last 2 years. I only added one, which is XLV, which is an ETF. But yeah, that might give me, looking at some resilient companies, that might give me my initial list if I'm looking to add a ticker. But then that company has to go through this whole process of business evaluation before I decide to add it to my portfolio. If you're, I'm not sure that answers. Even for the great company, we need to know if the price is expensive or cheap. So that's I will look at it, but that's comes very late in the game, because if I'm looking at it, my holding period is, I want to hold it for at least 10 years. There may be 1 or 2 times, and because I regularly buy it, I don't put everything in one go. That's I never held myself back because right now it is looking very expensive. Yeah, if it is looking expensive right now, I'll put 10% of what I overall want to put in. Okay. So current price does play a role, but it's a very small portion. So I'm not going to buy a stock if its PE looks cheap to me, but the business is weakening. I would rather buy a stock in which the business is strong and growing, even if that means I may have to little overpay and it is expensive on my PE ratio or PS ratio, or whichever valuation ratio you are following. Because over time, if the business is good, it will grow into it. And again, I don't put 100%, immediately. I'll start building, like Mercado Libre, I've been building positions since 2017, right? It was a 350. And I also bought it at 1900. And again, bought it at 950, because I know this business is good. And on top of it, we have a way to reduce our cost basis. So that's why. But the current price plays a very small role in decision making. Cool. All right. Yeah, I'll take rest. Need something. Oh, I think it'll take a couple of days to get through this cold. So thanks, everyone. I know not the best of the session. I wasn't fully prepared for it, but like I said, I didn't want to cancel at the last moment. And so thank you to you all for joining in today. And next week, maybe we'll pick up a company and go through the process, what I just explained to Bobby. Pick up a new company, and we'll go through the whole process of understanding business and then forming our thesis on, about that company. Cool. Thanks, everyone. Bye-bye.